Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Keith Schafer, editor of Oil and Gas Investment Bulletin. Keith, thanks for being with us.
Thanks for having me, Scott.
I wanted to get your take on the oil price right now, where it's come from, what it's doing, and what you see that indicates for the future for oil and oil prices.
Okay, well, basically oil demand around the world is picking up very steadily. Not to any huge spike, but very, very steadily. We've kind of hit the limits now of what production can give us. So OPEC has almost no spare capacity. Everybody in the world is running flat out, and yet China is still only using 1/5 of the amount of oil per capita as the rest of the industrialized world. So there's still a lot of demand that's going to come there. And so we're going to be hitting the wall here shortly. And you would think that'd be great for oil stocks, but actually it's not. Because what the world has said, what the world's markets have said very clearly now, is that as soon as oil gets over $125 a barrel, which is where we're at right now on the world stage, the world starts to price in recession. So these junior stocks get sold first, including the junior oil stocks, strangely enough, even though you would think that a higher oil price should improve their cash flows, which it will, but it will not improve their stock prices, which is a little hard for investors to understand. And we're kind of at that cusp right now. So I'm actually being a little cautious, and we actually don't want oil to go any higher. I'm hoping oil recycles down to 100 or even 90 bucks a barrel, because then the rising tide back up will lift all boats and we'll have a great run.
Creates the opportunity for the investors again.
It does, but if oil goes above $125 a barrel right now, you're going to see these junior oil stocks get sold off, and everyone's going to be scratching their head wondering why this is, but it's because the market's pricing in recession and the risk assets get sold.
And what about gas? How bad can it get?
Gas has been bad now, steadily worse for the last 3 years, and it's going to get much worse. I know one of the analysts here today was talking about $1 bid for natural gas in Canada this summer, when 5 years ago it was 14. But I think it could even go lower, because what's happening right now is the U.S. is increasing production so rapidly. They're up 6 billion cubic feet a day over last year, even at these low prices, because they've been so good at bringing in foreign money on free joint ventures. So that is going to mean Canadian gas gets stranded, and we could actually see production forcefully shut in and gas go no bid for a while, either in the spring or summer this year or next.
Well, what's an investor to do in this scenario with the high oil prices that are potentially coming down and gas prices that are in the toilet and don't seem to be resuscitating anytime soon?
I think investors have to be very, very cautious right now, and don't be thinking that they have to be in the game. So you find 2 or 3 stocks that have great growth rates and that have a lot of running room. And it's going to be a stock picker's market, because the overall tide here is against us a little bit on both oil and gas. And so you need to be very cautious and don't be afraid to just stay in cash and wait for that right opportunity.
Now, it's a stock picker's market. Is there a stock or two that you want to mention that you've highlighted in your publication or that you are liking right now?
Well, one that I really like right now is a company called D3, symbol is DTX on the Toronto Stock Exchange, and they've got a play called the Alberta Bakken. So last year they had a few bad wells, stock got cut in half, but now they figured it out. The last 2 wells have been great, and they think that they just told the market yesterday or the day before that they're going to increase the number of wells they're drilling from 2 to 11, and they increased their guidance from 4,000 to 5,000 barrels a day at year end. And I think they'll be doing 6,000 to 7,000. So I like that one a lot.
And you own that one?
I own, yes. So what I do in my service is I own all these stocks, so the subscribers know I've got skin in the game.
Just from a disclosure perspective, I have to mention I do not own that one, but you do.
Another one that I think has a lot of running room here is one of the international plays. It's a little more speculative. In fact, it's a lot more speculative. It's a company called Crown Point, symbol CWV on the venture board. They've got about 20 million cash. They're doing about 2,000 barrels a day with this new deal they just announced this week. But the big opportunity here is that true shale oil plays are quite rare. Shale gas plays are not. There's a lot of them. But true shale oil plays are very rare. They've got what looks like to be one of the best in the world right now down in Argentina. It's probably got 3 to 5 times potentially as much oil as the Bakken on a per section basis, on a per square mile basis. The shale is so much thicker. So it's It's early days, so there's a lot of risk here, but if this play works, there is an amazing amount of upside, and there's several Canadian juniors down there.
Nice, nice. Thanks very much, Keith, for your take on oil and gas.
Thanks.
Again, that's Keith Schafer with the Oil and Gas Investment Bulletin. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.